There's a spoiler in the Dell. Let's talk to Reuters correspondent Nadia Damouni. Nadia, just when we thought this deal was going to go through, you have a Reuters exclusive today about how the largest shareholder, Southeastern Asset Management, not liking this deal, feel it's undervalued, which happens a lot, but are they really going to be the spoilers here?
You know, everybody's waiting for Southeastern to come out. They own about 7.5% in Dell. They are just the first shareholder after Michael Dell that owns a big chunk of the stock.
Okay.
And of course, Southeastern is no stranger to controversy. They've come out with Chesapeake, with a couple
the CEO there, yeah,
with
he's a
Olympus,
cage rattler,
yes,
like.
Mason Hawkins.
Right.
He doesn't care. But right now, we haven't heard anything official from them.
Okay.
So in our story last night, we have heard that they were disturbed by this offer price at $13.65.
Right.
They have actually said publicly in the past they believe Dell is worth $20 or even more than $20.
Okay.
So you better believe that they're waiting to see what the proxy says, how they ran this process behind the scenes, how JP Morgan advised a special committee and getting to an LBO analysis.
So do you think other shareholders are going to fall in line with them?
You better believe it. They're all waiting. So they've talked to us. They've said they also want to vote against this deal. But of course, shareholders say one thing today. If a big guy doesn't come out like Southeastern and say we're against this, they may vote with their feet. So I think everybody's pegging their luck on Southeastern, what they do.
So the consortium is saying at this point that they're not going to raise their bid. But at a certain point, you think that they're going to have to, and that, what about rival bids here?
It might be M&A 101. So sometimes what we've seen in the mega LBOs is a kind of a lowball offer, and we have a management buyout right now with Michael Dell. He's obviously the founder and wants to take this company private. And so people are suggesting $13.65 is a starter offer. I'm not saying right now this is going to happen, but tactically we have seen where they could bump. So I think that a lot of investors are telling us they're hoping there could be a sweetener to the current $13.65.
All right, Nadia, thanks so much for that exclusive.
Thank you, Lisa.
And I'm going to turn now, and from Denver, live from Denver, we have Tom Rosine. He's the head of research at Lipper. And Tom, hello there. We're going to talk about that we've seen this huge flow into stock mutual funds for the past 5 weeks. In fact, for the week ended February 6th, that marks the strongest 5-week run into equity mutual funds since April of 2000. But the money is not really coming out of the bond market. Is that right?
No, actually, you know, bond funds have actually been taken in quite a handsome amount as well. Fixed income investors are still piling money in there to the tune of about $38.6 billion net new money for this is by the week ended February 6th. But what's interesting is we think money is coming off the sidelines finally. Pent-up demand for equity funds has been around since late December.
That's right, yeah. Mom and pop jumping in here, the retail investor jumping in. But this differs so far from 2012, which you call 2012 a sort of tale of two cities there in terms of the investors kind of favoring the passively managed funds, right? But so far there's a little bit of a shift in this for 2013.
Actually, there's a complete shift. What we saw, and if we take a look and say ETFs are mainly institutional and mutual funds are retail, this is where we get the dichotomy. Equity funds in 2012, as far as on the retail side, saw about $129 billion in outflow, while on the ETF side, we saw $111 billion in inflow. That's passive versus active, and it certainly has been the story, and now it's quite different. We're actually seeing about $37.7 billion net new money coming into mutual funds, while we only saw about, I'm going to say 24.7 into equity ETFs. Still a good number, mind you, but it's changed. The proportions have changed considerably.
All right, so very quickly, what do you expect going forward?
Actually, we expect it to continue. I was a little surprised seeing a big bump in the market on Monday that we still saw positive flows. But I think investors, now that the issues of all the concerns at the end of the year are gone, equity demand is certainly there, and I think equity investors are going to continue to pile money into the conventional fund business.
All right, Tom Rosine from Lipper, thank you so much from Denver. I'm going to go now to the hot spot where I am greeted by our friend Ernie Scheider, Reuters correspondent here. All right, Ernie, let's talk about LinkedIn on a tear. Everybody is endorsing LinkedIn with their strong earnings. They beat seventh quarter in a row.
7th quarter in a row, and this is really the bright spot in the social media landscape right now. Facebook can't do it, others can't really seem to do it. What has LinkedIn got that the others don't got? And really what I think it has is a stable of professionals connecting people together, people that will actually pay for the service. And LinkedIn has gotten very creative, and also the services that it provides. You can now directly apply for a job through LinkedIn as well. So they also are extremely profitable. Gross margins north of 90%.
Yeah, amazing.
I mean, a lot of businesses would kill for that right now. And they're just really dominating just the job space as well, connecting different professionals professionals, like I was saying. You know, I saw a tweet the other day that was joking that LinkedIn is eating Monster's lunch. I mean, who remembers Monster now?
Monster on the decline.
Yes.
All kinds of bells and whistles there, CEO blogs. And I actually think this endorsing thing has become somewhat viral. It's almost like a Facebook thumbs up, like their version of it. You kind of want to get your little endorsement there.
I endorsed you the other day.
Oh, thank you so much.
Sure.
Stocks up. I'll return the favor. Stocks up 18%. For what? I don't know. Pie eating? I don't know. What did you endorse me
You'll
for?
have to find out.
All right. Let's talk about Radio Shack. Up 3% today because the new CEO coming from Walgreens. I guess folks liking this.
You know, he's coming in, obviously a big retail experience there. One of the things that I'm really concerned about, though, with this is because most people buy electronics from Walgreens already, you know?
Yeah.
You know, if you're traveling in a new city like Boston or Miami and, hey, you forgot your headphones, you stop into a Walgreens where you get the shampoo that you need, and also I'll get the headphones right now. So Radio Shack really has to find a new niche to get consumers interested in going into its stores. It's got a lot of small locations around the country. That's been its staple for years, but it tried in the past to do more mobile phones, but now Best Buy is really making a concerted effort to really push into the mobile phone space. So what is going to be the the big shtick here that will help Radio Shack? I think
quirky,
that's what
weird stuff that you can't find anywhere else, like headset pieces and things like that. I have found, but you know, iPhones and stuff like that, margins are tough for a store like Radio Shack. So
and you know, the internet, the interwebs, as they say, offers a lot of ways to get this stuff.
That's true. All right, lastly, let's talk about Moody's here. Very strong earnings, but the stock is down 6%.
Nobody cares about the earnings.
Nobody cares about the earnings because of this little S&P case that's pending here from the DOJ.
Yeah, I mean, people are concerned basically that Moody's is going to be next, that the Department of Justice is going to come after them. Basically, the allegations from the Department of Justice is that S&P didn't properly rate mortgage bonds, and you know, Moody's certainly rated some mortgage bonds out there, and so the concern is that they will come after them. Moody's didn't downgrade the U.S. government, though, so...
That was the S&P.
We'll see.
Well, we'll have to see. All right, Ernie Scheider, thank you so much. Remember, everybody, follow us on Twitter at Reuters Insider and check out more videos at Reuters.com/ReutersTV. Have a great weekend. If you're in the East Coast, bundle up. All right, we'll see you Monday. I'm Lisa Bernhard. This is Reuters.